Hi friends, if you were to ask me that Rahul, which is that one sector that is likely to do well in short term, mid term as well as long term, my view will be it is going to be wealth management sector. Two reasons for it. Reason number one is have a look at my screen and what you see is the asset under management of wealth management industry is set to double in the next 5 years by 2030. It is going to hit 2.3 trillion US dollars. So from a mid to long term perspective, this sector is likely to double from an asset under management perspective. But if you look at from short term perspective, the growth is huge. There is a huge momentum in this particular sector. For example, if you have a look at my screen, what you note here is 361, one of the very established wealth management company. And if you look at their last 4 years of asset under management, AUM's growth rate, you will see it is around 24%. This is just one example. Have a look at my screen and you will see Nuvama, for example. Under the wealth management sector, their AUM has grown at around 18% year on year last year. If you look at, for example, Motilal Oswal, what you note here is that their asset under management has grown up in the last 1 year at 31% CAGR. And if you do some maths, between 18 to 31% of growth rate is what we are seeing in some of these companies in terms of the asset under management. What does it indicate? It simply indicates that there is a huge momentum in wealth management companies in 2025, and this is likely to sustain over a mid to long term perspective because of various reasons that I'm going to talk about in this particular video. But the second reason is that in this sector, there is a low competition. Why? Because the entry barriers in this sector is very, very high. Only players like Jio Finance can dare to enter into this space because this is a highly regulated industry. And also, in order for anybody to enter into this space, they need decades of experience. Why Jio is able to enter into this space? Mainly because they have huge capital backing, they have a huge distribution network, and they have backing by Ambanis. These three reasons you won't find anywhere else, and only big companies can dare to enter into this space. Now, the reason I'm creating this particular video is mainly because wealth management space is highly complicated. For example, if I were to ask you, do you understand the business model of Nuvama Wealth Management? I can guarantee you that 90 to 95% people will have no clue what is the exact business model of Nuvama Wealth Management and how is this company growing. So my attempt in this video is going to be simplify wealth management space by using two examples so that you become very, very clear. Even a 10th-year-old boy will also understand. I'll try to simplify in that manner. Whether I will succeed or not, you are going to be the judge and jury, and your likes and comments are going to indicate to me that you are learning something new. Speaking about learning, I also invite you to a completely free 2 days training program, which is otherwise valued at 10,000 rupees, thanks to our incredible partners Outskill. Now, I'm not speaking about this training program just because it is free. I'm speaking about this training program because it comes with 16 hours of live training over Saturday and Sunday, starting from 11 a.m. to 7 p.m. In these live classes, you are going to learn 20 plus AI tools, building tools and applications with AI, no coding required, AI generated images and videos that will blow your mind, data analysis without the need for coding, creating professional presentations using AI and Excel, creating AI agents which can automate your workflows and increase your efficiencies, and much more. This training program is for everybody, whether you are in tech, sales, HR, operations, or even a business owner. Professionals from over 40 plus countries have joined this program and have loved it. There are limited seats, so don't miss out. Click on the link in the description or in the pinned comments and book your seat now. Also, don't forget to join their WhatsApp group to get regular notifications, and make sure to attend the introductory call that is happening on Friday, 7 p.m. With that, let's move to our stock number one, which is Nuvama Wealth Management Limited. I'll give you totally unbiased commentary. Allow me a few minutes of time. The first point is that Nuvama Wealth Management got listed on BSE in September 2023, 2 years back roughly, and it got listed at around 2,700 rupees per share. You can go and check the current price and you will find that this company in the last 2 years have produced multi-bagger results. But before we consider any company to invest in, what we need to understand is the business model of the company and understand what are the future prospects of the business growth. So what you see on my screen is Nuvama Wealth Management operates in 5 segments, and let me quickly explain one by one so that you understand the potential in each of these segments. Segment number 1 is Nuvama Wealth, which is contributing around 28% of revenues to overall revenue generation. And if you look at the past track record of Nuvama Wealth, you will find some mind-boggling numbers here. 30% growth in assets in the last 4 years. Revenues, if you look, grown at 31% CAGR basis in the last 4 years. More importantly, if you look at the operating profit, the profitability of this segment has grown up by almost 79% CAGR in the last 4 years. And the main reason for this profitability is because of the cost to income has come down massively. It has come down from almost 90% to 67%, and it is at 23% 4 years delta basis. Now, what does this Nuvama Wealth actually do? So this segment operates in ultra high net worth investors or high net worth investors. These are affluent people, and if you look at India, out of 140 crore plus population, there are only 30 lakh households in HNI segment and only 35,000 in ultra high net worth investors. UHNIs are those people who have around $30 million upwards sort of a net worth to be managed, and HNIs are typically people who have more than $1 million of wealth to be managed. And this company, Nuvama Wealth, is targeting this particular segment. Why? Mainly because 70 to 75% of total financial wealth is in these few people hand. It's not even 1% of our population. It might be around 0.01 or 0.02%. You can do the maths. But the point is that in India, wealth is concentrated at a very, very top level. Top 0.01% of people in India hold around 70 to 75% of India's wealth. And what does Nuvama Wealth offer to these people? They actually manage the wealth of these people. For example, if you look at this screen, you will see that there are 1200 plus relationship managers, RMs, 7,000 active external wealth managers, which are not employees of Nuvama, but they are the contractors. And if you see what sort of solutions they provide, 50 plus investment solutions. So for example, if you go to Nuvama Wealth's website, you will note things like portfolio management services, 30 plus PMS strategies, alternative investment funds, mutual funds. These are tailored investment solutions and products that Nuvama Wealth offers to these HNIs. Now the key question is that can this segment continue to grow at the rate it has been growing? Absolutely possible. Why? Because if you look at this data, you will see that India's high net worth individuals are likely to double by 2027. And also Angel One Wealth published this data here, which says that around 1.65 million HNIs are likely to be there in India by 2027, which is growing at around 16% CAGR. So there is going to be huge growth in the top wealthy people in India, and this is where Nuvama Wealth operates. And very soon I'll talk about another company that is also operating in mass scale. Again, I'll come back to that in a minute, but the prospect of the future growth of this particular segment is likely to be huge in the coming days. Second segment that we need to explore is Nuvama Private, which is contributing around 20% of the revenues. And here the targeted customers are very, very different. For example, the profiles are family offices, business owners and entrepreneurs, CXOs and partners, very, very different sort of customer profiles. And more importantly, if you look at the data, you will see that 56% of the revenues in FY25 out of this segment is annual recurring revenues. What does it mean? This is a cash cow business for the company because almost there is a predictability here in terms of the revenues because these are annual recurring revenues. Very, very important for a company to have a business segment that is constantly churning the cash. It's very, very important in my view. And also, if you look at the set of numbers here in terms of the profitability growth, operating PBT has been growing at around 59% in the last 4 years. If you look at the revenues going up by almost 31% in the last 4 years, and so on and so forth. The third segment is the asset management side of the company, which is Nuvama Asset Management. Only 2% of the revenues are coming from this segment. So let's not go there and let's rather explore asset services and capital markets. So if you look at asset services, that is contributing around 22% of the revenues. And if you look at the capital markets, it is contributing around 26% of the revenues. Now, what is asset services? What is capital market segment here? Asset services is a very, very niche area. Why? Because here they are serving clients like FIs, alternative investment funds, PMS, portfolio management services. So for example, tomorrow, if I wanted to set up my own PMS, Rahul PMS, then I would need advisory. I would need a hell lot of other services from a regulatory perspective, from fund setup perspective, and many other services. Then I can reach out to Nuvama Asset Services and they can help me out with that type of services. So they are really catering to very, very niche area here, which is FIs, DIs, PMS, AIF, and so on and so forth. Very, very niche area. Secondly, here in terms of the capital market, they are targeting clients like which are institutional equities. For example, IPOs. For example, qualified institutional placement. For example, mergers and acquisitions. This is not very niche. A lot of companies are doing it. But in my view, asset services is quite a niche area. I have not seen many other companies that are operating in this particular segment. Now, if you look at the track record in this particular segment, 41% revenue growth in asset services in the last 4 years and 23% revenue growth in terms of capital markets in the last 4 years. But more importantly, last 1 year has been phenomenal. From FY24 to FY25, if you see asset services revenues grown by 99%. If you look at capital markets, 59% growth. But more importantly, if you look at the profit before tax, 127% growth in the profitability. Tell me how many companies you know that are growing at this rate. And this is why I say that right now, wealth management sector is at prime. There is a lot of growth coming in this particular sector, and this is likely to sustain as well in the next 4 to 5 years. So overall, if we look at Nuvama Wealth Management Limited as a company, put together all the segments, what you note is the revenue growth in the last 4 years, 31%. Operating profits last 4 years, 49% CAGR growth. Cost to income has come down almost by 18% basis every single year. What does this tell you? Definitely, Nuvama Wealth Management is growing fundamentally. It's a very, very growth sort of a company. But whenever you want to invest in any growth company, you have to first check the valuations. Extremely important point where a lot of us retail investors get the valuations wrong, will buy the stock at the high price, there will be correction, panic will kick off, you will sell it at loss. I've been there, I've done it. That's why I'm sharing it practically. The only time to pick up stocks that are growing at a very, very good speed is when the PE ratio is not too high. For example, if you look at Nuvama Wealth's PE ratio, and you will note that it has danced between almost 34 here in October 2024. It came down to almost 20 level here in March 2025. It's gone back up to 30 now. Tell me when the PE ratio of this company in the month of May 2025 was around 20, all of this data, all of this growth was still valid. But what was different here? The valuations were all-time low in terms of PE ratio. These are the moments where it really gives us a good chance to take entries. Right now, the valuations have gone back up because of the growth market has recovered now. It doesn't mean that it will never give an opportunity. Again, the stock will give us an opportunity. It is we need to really be patient with companies. Look at the valuations before you take any investment calls. One red flag about this company that I want you to understand, because I did promise to you that I will give you totally unbiased commentary. One red flag that I see right now is that if you go into the shareholding pattern of Nuvama Wealth Management, you will note that 62.8% of the promoter shares have been pledged by the promoters. Now, pledging the shares by promoters, it's not generally considered a healthy sign, but when a company is fundamentally good, there might be good genuine reasons. But again, this is a red flag. I honestly wanted to share it with you so that you understand both sides of the picture. You understand the fundamentals, the business growth of the company, you understand the valuations, and then you also understand the negativity or the red flags about this particular company. If you like this analysis, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to bring such content for you at zero cost. Also, you can consider joining my YouTube community exclusively for members. Why? Because just 1 month back, I broke down Nuvama Wealth Management in a greater detail, talking about every segment, talking about a lot of details. And if you understand the business models of the company, you are likely to take informed investing decisions. Stock number 2 is Jio Finance. And the reason I'm discussing Jio Finance is because if you look at the wealth management sector, on one side of the spectrum is well-established companies like Nuvama Wealth Management. And on the other side, there is a new entrant called Jio Finance. Let's try and understand what is happening in Jio Finance. But before I start, if you look at Jio Finance's price chart, of course, I can't show you the price chart here on this video, but if you go and look at Jio Finance's price chart, the only apt dialogue that comes in my mind from Panchayat web series is this one. And this makes me chuckle. Why? Because if you look at the Jio Finance's price chart, there is no head and leg for this particular company's price chart. Why? Because the company is building their business. If you look at valuations, you wouldn't know where to take the bet in. If you look at, for example, the P&L statement of the company, you wouldn't know what is so special about the P&L. Why? Because the company is building business. Therefore, finding the right price point for Jio Finance has become extremely difficult in my view. But let's focus on the latest and greatest from Jio Finance. I'll give you very, very important points that you need to understand about. Point number one, if you look at Jio Finance's business model, you will see that from a target customer perspective, they are very different from Nuvama Wealth Management. Why? Because they are here from a wealth management perspective are targeting even the mass market customer, which has from 2.5 lakh to 7 lakhs, which was very, very different from the case of Nuvama. As we saw in the previous section, Nuvama is only targeting the top rich people, 0.01%, 0.02% sort of people. Here, Jio Finance is targeting mass market. It is going to be hugely interesting for me to see how Jio Finance pans out over the next 10 years or so. But secondly, this is more diversified business than Nuvama Wealth Management. Why? Because they're into lending, they're into insurance broking, they're into payment solutions, payment bank. AMC wealth and broking businesses recently are getting approvals. Let me speak about them in a minute. If you look at this company's business structure, you will find it is highly diversified, highly complex. But let me quickly talk about the joint venture they have built with BlackRock. There are two joint ventures that we need to understand. Number one is in the wealth management space, which is you've got your broking business as well as wealth management business. Second is the asset management JV, where you've got the AMC business house, right? Now, the recent good news that Jio Finance has been getting is in the month of May 2025, they got SEBI's approval for their AMC business. And after that, Jio BlackRock mutual funds have been launched. 3 mutual funds have been launched by this company so far. NFOs have been coming out. Jio BlackRock Liquid Fund, Jio BlackRock Money Market Fund, Jio BlackRock Overnight Fund. Again, I'm not promoting Jio BlackRock here. My point is that they are building their business slowly. More and more mutual funds are likely to be launched by this company. Now, whether this can disrupt the mutual fund industry or not, you let me know in the comments what is your view. In my view, it is going to be slow start. It is not going to overnight disrupt everything, because all other AMCs, for example, ICICI Pru, HDFC, SBI, they are all doing phenomenally well, and there is a market for everyone. But what do you think in your views? Let me know in the comments. While I move to second point, which is the Jio broking business, right? Likes of Zerodha, Grow, Dhan, whatnot. Jio broking business, just 4 days back, 27th June 2025, they got approval, SEBI's approval for their broking business. It is going to be very interesting for me to see how they do in this particular business. What is the unique differentiator, if at all, they are bringing into the broking business. Now, moving on to the P&L statement of Jio Finance, you would note that between FY24 and FY25, there is not much movement. If you look at the profit after tax, 1600 crores in 24, and in 25, 1613 crores. This is very flat, and in my view, we are not looking at the P&L statement of this company at least for few more quarters until the business shapes up. And for that, let me bring you some key highlights. Number one is that if you look at the Jio's earnings call, what you would note is that in FY25, the company has pumped around 1346 crores of equity into various entities. Now, if you go and look at the ROE number of Jio Finance, you will find what is this? Because here they are pumping equity into the business and the returns are not coming out. Why? Because the company is now shaping up. Therefore, do not look at fundamental numbers for Jio Finance for a while. Good news is that the company is putting up equity into the business so that the company can grow. If you look at their lending and leasing business, very good growth rate. If you see December 24, their AUM was 4,000 crore. It has gone up by 3 times, almost 2.5 times, 10,000 crores by March 2025. Gradually, they are building this particular lending and leasing business. Secondly, if you look at the Jio Payments Bank, CASA customers have almost 3 times between FY24, FY25. If you look at the deposits, gone up from 88 crores to 295 crores, 3x growth in 1 year's time. And guess what? This deposit that they are getting, what are they going to do with this? They might be offering loans. And this is what exactly they are doing. If you look at very recently, they have launched loans against securities, loan against mutual funds, stocks, etc., which is offered at an interest rate of starting 9.99%. This is the model that majority of the banks follow. You keep the deposit in the bank, and what do they do with the deposit? Part of that deposit goes into lending. This is the business that Jio Finance is now launching very slowly. And this brings me to very important point about Jio Finance's business, that it is all about cross-selling and upselling. You see the little diamond here? This represents that there is going to be a portion of customer that is going to need payment solutions. They are going to need loans. They are going to need insurance. They are going to need investment services. So Jio is all about selling a lot of products and solutions to one single customer if that customer comes onto Jio app, which is the next point, that if you look at this Jio app, Here, it is going to be one-stop solution where one customer can get a lot of services and products. And right now, this Jio app has got 8 million monthly active users. And when this Jio app gets more and more popular, more and more products and services are launched, more and more people are likely to use this particular app. And this is where they're going to do cross-selling and upselling. This is the important point we need to understand about Jio Finance. Now you may ask me, Rahul, what is the negative point about Jio Finance? Can you give us some negative points about Jio Finance? There is nothing that I can think right now from a negative point perspective, but what you need to know is that Jio Finance is going to remain extremely volatile in my view. It is a game of patience. Valuations, if you look at, or if you look at the entry price, exit price, you are going to struggle to find right valuations because right now business is building up. What is that you evaluate the company on? You are going to invest in this company or not, that will depend on your bet onto Reliance's management. Do you believe in Reliance's management or not? Do you think they can disrupt this particular sector? That is where your bets lie. And please understand the big risk that the company is taking is it is a highly regulatory industry. Regulation can kill businesses. There will be setbacks throughout this journey. So do not just blindly go and invest in Jio Finance. Please make sure you understand this particular risk. So in this video, I have tried to simplify wealth management space by using Nuvama Wealth Management and Jio Finance as examples. And I hope you have learned a lot of things. If you did, let me know in the comments a simple thank you. And like this video, hit the subscribe button so that you can continue to learn more and more. Speaking about learning, please do check out the 2 days completely free AI training by Outskill. There are limited seats. Go and grab your seat now. With that, I hope to see you in the next video. Until then, keep rocking.